$21.2 billion in net income. In just 3 months, JPMorgan Chase has once again delivered results that exceeded expectations, powered by record revenue, exceptional investment banking performance, and one of the strongest balance sheets in global finance. But what really drove these numbers, and what do they mean for investors? Let's break it down. JPMorgan Chase kicked off the second quarter of 2026 with another record-breaking performance. The bank reported net income of $21.2 billion, while earnings per share reached $7.70. Managed revenue climbed to $58 billion, supported by strong results across every major business segment. Profitability remained exceptional, with a 29% return on tangible common equity, while the bank maintained a 14.1% CET1 capital ratio and more than $1.5 trillion in cash and marketable securities. These numbers highlight not only strong earnings, but also the financial strength and resilience that continue to set JPMorgan apart. The biggest driver behind JPMorgan's outstanding quarter was its commercial and investment bank. Revenue in the division climbed to $24.9 billion, while net income reached $9.7 billion. Investment banking revenue increased to $3.9 billion, with fees rising 30% year-over-year, driven by strong advisory activity and equity underwriting. Markets also delivered exceptional performance, generating $12.1 billion in revenue. Equity markets revenue surged 86%, while fixed income markets grew 6%, reflecting elevated client activity and strong demand for financing. Together, these businesses once again demonstrated JPMorgan's leadership across global capital markets. Beyond strong earnings, JPMorgan continues to stand out because of its financial strength. The bank ended the quarter with approximately $5 trillion in total assets and maintained a 14.1% CET1 capital ratio, well above regulatory requirements. It also held $1.5 trillion in cash and marketable securities, providing significant liquidity and flexibility. During the quarter, JPMorgan returned capital to shareholders through $4 billion in dividends and $6.2 billion in share repurchases. Looking ahead, management expects approximately $105.5 billion in net interest income for full year 2026, highlighting confidence in the bank's long-term outlook. Despite an uncertain economic environment, despite another outstanding quarter, JPMorgan remains cautious about the road ahead. CEO Dimon highlighted that the U.S. economy continues to show resilience, supported by AI-driven investment, stronger business spending, and a healthy labor market. At the same time, he warned that persistent inflation, geopolitical tensions, large fiscal deficits, and elevated asset prices remain important risks. While JPMorgan enters the second half of 2026 from a position of strength, management believes investors should continue monitoring these macroeconomic challenges closely. JPMorgan, once again, proved why it remains the benchmark for global banking. Record profitability, diversified revenue streams, disciplined capital management, and one of the strongest balance sheets in the industry continue to support its long-term strategy. While macroeconomic uncertainty and geopolitical risks remain, the bank's scale, financial strength, and consistent execution leave it well-positioned for future growth. For investors, JPMorgan continues to represent one of the highest quality financial institutions in the world. If you enjoyed this analysis, don't forget to like the video, subscribe to Market Atlas, and let us know in the comments, do you think JPMorgan can continue outperforming the market in 2026?